Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. On today's show, we're talking about demographics and the senior housing market. The baby boomers began turning 65 years of age in 2011. Today, the oldest baby boomer is 72 years old. And by 2029, the remainder will also reach age 65. They will account for more than 20% of the total population. By 2050, the population of senior citizens in the U.S. is estimated to equal 88 million people, nearly double the current population of 49 million. Much of the new capacity in senior housing has been built in anticipation of this massive future growth. But that growth will not hit assisted living and skilled nursing for at least another decade, maybe more. The near-term growth area is in independent living. One of the primary drivers for senior housing is longer life expectancy. The 1970s, the average life expectancy was 80.2 years of age. By 2018, expectancy has grown to 85.5 years of age. It's estimated that 1 in 4 will live to be 90, and 1 in 10 will live past 95. A report issued last week by Fannie Mae's research team takes a broad summary view of the senior housing market across the nation. Generally speaking, nationwide occupancy in assisted living peaked back in 2015 at 89% occupancy. Since that time, there's been a lot of new product injected into the market, causing average occupancies to fall to about 85%. In spite of the low occupancies, we continue to see year-over-year rent increases of about 3% a year. That's largely driven by labor costs. The report notes that occupancy is falling marginally across the nation, driven by the large amount of new product entering the market last year. Thankfully, the amount of new supply is also slowing. The number of new starts this year declined by 21%, and this shows that the market has gotten a little bit ahead of itself. The silver lining in this is that absorption rates have reached record levels in 2018, with nearly 14,000 units being absorbed during the year. That's a 34% increase in absorption compared with the prior quarter. So if absorption rates hold steady or continue their upward trend, we can expect occupancies in assisted living to increase into the high 80s and eventually into the 90s. That's of course assuming that we don't see a huge uptick in new construction. San Jose, California had the highest occupancy and the highest rent growth. They were at 95% occupancy. Houston and San Antonio had the lowest occupancies in the country. In fact, San Antonio had a major assisted living healthcare provider go bankrupt a few months ago. Occupancy in that market is averaging below 82%. They've really gotten ahead of themselves. The market cap rates for senior housing seem to be hovering between 6.8 and 7.8% over the last couple of years, with no clear trend line in that range. The most troubled segment in senior housing is the skilled nursing sector. One of the nation's largest operators is 5-Star, based out of Newton, Massachusetts. The company operates 283 senior living communities across 32 states. Skilled nursing occupancy dropped again this year and is running at an industry average of 78%. The skilled nursing segment has lost market share to the newer assisted living and memory care models, which offer lower cost alternatives for many clients who have enough of the basic human functions to be accommodated by assisted living and don't actually require skilled nursing. It's been a difficult quarter for 5-Star and the senior industry as a whole. A lot of new units have flooded the market, combined with a decline in the growth rate of the 85 and above age demographic, has created an operating environment that's really been kind of difficult over the last year. Now, we will see a demographic uptick, but it's a few years away. In the meantime, the whole industry is going to experience a tiny bit of pain. CVS Health, back in February, took a $2.2 billion charge related to the company's long-term care business. CVS acquired Omnicare back in 2015 in a deal valued at $12.9 billion. And since that time, the headwinds that have battered the whole industry have also battered Omnicare's clients, in particular skilled nursing. These challenges have included rising wages, a competitive labor market, increased regulation. Here again, skilled nursing seems to be experiencing the most pain. The silver lining in the industry goes to those who have differentiated product offers. We've seen that residential assisted living segment has been able to outcompete the big box facilities with a more boutique offering and higher levels of care. The highest levels of occupancy right now are being seen in independent living. Developers seem to be investing heavily in that segment, and both 5-Star and CVS have pointed to that segment as the solution to their financial problems. We know that demand is going to double over the next 15 years. So operators are clearly trying to position themselves to win, even if it means suffering a little bit of pain in the short term. As you're thinking about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.